On today's episode, is the housing market making a comeback tour? My name is Mark. Welcome to the Gentleman Broker Mortgage Brief. The National Association of Realtors are predicting a 2026 housing comeback. This was the headline of an article back in November of 2025. They said a steady job growth and lower rates could fuel a sales surge ahead. So, how does this hold up with reality? Mortgage applications last year were higher than the one before, indicating that people were and are looking to enter the market. Mortgage applications for home purchases in 2025 were 31% higher compared to 2024, according to the Mortgage Bankers Association. Right now, we are seeing about a 10% increase in loan applications from 2025, so it's clear that buyers are slowly easing into the real estate market. Mortgage rates remain one of the biggest constraints for buyers. After sitting around 7% in 2025, the 30-year fixed rate averaged 6.23% this week. That's according to Freddie Mac. The current forecast for rates will be to slowly but steadily decline throughout the year. I know before tension in the Middle East, we were predicting that the Fed would slash rates and that summer we would be seeing big cuts in those rates. All this tells me two things. One, a prediction is not certain. Don't rely on that prediction because you need to be able to pivot. Two, use predictions from your own personal situation to make decisions. Are you getting a promotion you've been working on? Are you having another child and need extra space? Are you having your in-law move in with you? Are you starting a side welding business and need a detached shop? You create your own future. You are the best at predicting what happens in your life. If you only make decisions based on what others tell you, there will be missed opportunities. And finally, what does a comeback even mean? Comeback from what and when? When you look at a car from the 1960s, you'd get one for like $3,000 off the lot. No anti-lock brakes, no power steering, no power windows, no power mirrors, backup cameras, airbags, crumple zones, no GPS, no Apple CarPlay. And I know these were options for some cars, and no doubt all the cars in the 60s were pretty sweet. But the point is, aside from inflation costs, the reason you pay $30,000 for a new Civic is because that car is objectively better in every way to a car from 50 years ago. And our homes today are no different. Homes from the 60s typically had big yards, but the home itself was relatively small. Bedrooms were small. En-suites were rare. Kitchens were small. Having more than one car garage was rare. Things such as air conditioning, Wi-Fi, soft water systems, instant hot water, solar panels, dishwashers, recessed lighting, smart appliances, better insulation, these things were far more rare. And of course, we can discuss the quality of craftsmanship of older homes versus newer ones for sure. But my point is, homes today have amazing features and are on average double the square footage than the homes from the 1960s. You get more car now than you did. You get more home now than you did. You get a better smartphone now than you did 20 or even 10 years ago. There is a cost to getting and expecting more. There is a cost to enriching our lives. We want a more comfortable, more capable, and a more spacious home, and there is a cost for that. For real estate agents, this is a reminder that home buyers are cautious but active. That a little reassurance goes a long way in helping those buyers to realize what they are truly gaining from home ownership: stability, comfort, wealth building, and memories. This goes for move-up buyers as well. A family handcuffed to a home that no longer fits their needs because of a low rate from a few years ago isn't always the best financial move. We can leverage the equity in that home, apply it towards the down on a new home, and stack it with seller credits to get that family into a home that better fits their current needs and keep their monthly payments pretty close to what they were paying before. So, we are a quarter of the way through this year. Are you going to buy a home? That's for you to decide. But I'll tell you what you should do. You should adjust your spending so that you are in control. You're going to balance your budget so you know exactly where your money is going. You're going to make saving a priority so that you can be ready when that right home comes along. You're going to pay your rent and your debts on time so your credit remains high. You're going to talk with a mortgage broker so that you know your spending power and what your monthly payment would look like. There is so much of life that is out of people's control. It's time to focus on what you can control. If you have questions about home affordability, want to apply for a home loan, or simply want to see where your numbers are at, you can always reach out to me at thegentlemanbroker.com. With that, I will leave you with this quote by Jack Welch: "Control your destiny, or somebody else will." This has been your mortgage brief for the week. For everyone watching, I hope today is the start of a productive week. I hope you are proud of the work you are doing. My name is Mark, and I am the Gentleman Broker.